Hello everyone, welcome to Betty Academy. Our job is to make school easier. Kindly subscribe, watch, like, share, comment down below, and don't forget to hit the notification bell. So in this lesson, we are going to learn about the features of a bond, together with the features of preference and ordinary shareholders. So to start with, let's look at the features of a bond. A bond is a long-term debt instrument or security. Bonds issued by the government do not have any risk of default. The government will always honor obligation on its bonds. Bonds of the public sector companies in Kenya are generally secured, but they are not free from the risk of default. The private sector companies also issue bonds, which are also called debentures in Kenya. A company can issue secured or unsecured debentures. In the case of a bond or debenture, the rate of interest is generally fixed and known to investors. The principal of a redeemable bond or bond with a maturity is payable after a specified period called maturity period. The main features of a bond or debentures are as below. One, we start with this one, the face value. The face value is called par value. A bond or debenture is generally issued at a par value of 1,000 and interest is paid on face value. Then the other feature that you need to know is about the second, the interest rate. Interest rate is fixed and known to bond holders or debenture holders. Interest paid on a bond or debenture is tax deductible. The interest rate is also called coupon rate. Coupons are detachable certificates of interest. The other one is about the maturity. Yeah, bonds have maturity. So with maturity, a bond or a debenture is generally issued for a specified period of time. It is repaid on maturity. So it could be a 1-year bond. Maybe it's maturing in a year's time, 2 years, 3 years, 5 years, 10 years. Yeah, so that's the maturity period. Redemption value, that is the fourth feature. So redemption value, the value that a bond holder or a debenture holder will get on maturity is called redemption or maturity value. A bond or a debenture may be redeemed at par or at premium, more than par value, or at a discount, less than par value, right? Yeah, so that's the redemption value. Yeah, it could be more than the par value or the face value or less than the par value or face value. The fifth feature is about the market value. A bond or a debenture may be traded in a stock exchange. The price at which it is currently sold or bought is called the market value of the bond or debenture. Market value may be different from par value or redemption value. So those are the features of a bond. So let's go to the features of preference, preference and ordinary shares. And ordinary shares. So the following, these ones, they are the features of preference and ordinary shares. 1. Claims. Preference shareholders have a claim on assets and income prior to ordinary shareholders. So equity or ordinary shareholders have a residual claim on a company's income and assets. They are the legal owners of the company, right? So the moment if you have a portfolio, let's say from the funding that you have in your firm, you could be having, you might have raised capital from either preference shareholders or ordinary shareholders. So when you are liquidating the firm, or when you are liquidating the firm, the last person that will have the claim, it's the ordinary shareholders, because they are the owners of the firm. But for the preference shareholders, they have a claim on assets and income prior to ordinary shareholders. Yeah, so that's what it means. The other aspect is about the dividends. With the dividends, the dividend rate is fixed in the case of preference. It's fixed in the case of preference sorry. The dividend rate is fixed in the case of preference shares. The preference shares may be issued with cumulative rights. That is, the dividend will accumulate until paid off. In the case of equity shares, neither the dividend rate is known nor does the dividend accumulate. Dividends paid on preference and equity shares are not tax deductible. So what happens is, for the preference shareholders, they could be, let's say, having an interest rate of 8%, yeah, of the preference of the share, of the shares. So what happens is, you see, you cannot distribute dividends when you're making losses. But what happens is, they may defer those dividends, and they keep on accumulating and accumulating and accumulating until it's paid off. But for the ordinary shareholders, they do not accumulate, and again, the rate is not known. So that one is at the discretion of the directors of that particular firm. Then we go to the third one, which is redemption. So redemption, both redeemable and irredeemable preference shares can be issued, right? So redeemable preference shares have a maturity date, while irredeemable preference shares are perpetual, right? Yeah, so for the redeemable, the date is well stated, but for the irredeemable one, the preference shares, it is perpetual. Yeah, it does not have a date to be redeemed. Yeah, then for the equity shares, they have no maturity date. Yeah, for the equity shares, they have no maturity date, but you can always sell your shares and get a capital gain, or rather a capital loss. But for as long as you still have your shares, you've invested in a certain firm, you are entitled for dividends. That is when the firm is making profit. Then the last one is about the conversion. A company can issue convertible preference shares. That is, after a stated period, such shares can be converted into ordinary shares, right? Yeah, so a company can issue convertible preference shares. Let's say you have those convertible preference shares for a period of 5 years. After the 5th year elapses, it can be converted into ordinary shares. So those are the features of a bond together with the features of a preference and ordinary shares. So a reminder, kindly subscribe to this channel, and kindly also watch out for our next video. Until next time, bye.